Assalamu alaikum everyone. So in this video we'll be starting with a new topic, and that is errors affecting and not affecting trial balance. So this topic is very important. Why? Because this is one of the most favorite topics of the examiners, because it is tested in every attempt in paper 1 as well as in paper 2, right? So make sure that you are familiar with all the errors that affect trial balance and those that do not affect the balancing of trial balance. Now before moving towards the errors, let me just quickly brief you about that what a trial balance is. So first of all, a trial balance looks like this. You write the name of the business, then a trial balance is prepared at a specific date, just like a statement of financial position is prepared at a particular date. Now this trial balance has two columns, a debit column and a credit column. So all the account balances that have a debit nature are shown in the debit column. For instance, your purchases, your inventory, your expenses, your current assets and non-current assets both. So they are shown in the debit column. Then all the accounts that have a credit nature, for instance sales, your incomes, your capital account, your liabilities, they are shown on the credit side. And in the end, when you are totaling both the sides, right, so ideally the totals should agree, right? The debit side should agree with the credit side, as it will show that it will give an assurance that the balances extracted from all of these accounts that are there in the trial balance were extracted correctly, as both the sides are matching with each other. Now let's summarize this all, that what is a trial balance? A trial balance is a list of all ledger balances or account balances which is prepared at a particular date. It has two sides, a debit side and a credit side, and ideally both the sides should agree with each other. Why they should agree, or why do we prepare trial balance, is because it has certain benefits. For instance, it helps in checking the account balances at a glance. You don't have to go through your books, your ledgers again. You have the balances in the form of a list in your trial balance, so this is good. Then what else? It uncovers any errors in accounts if the totals do not agree. Yes, of course, if your totals are not agreeing, your debit side is not matching with the credit side, then you will get to know that there are some errors, and then you will go to your books of original entry or your T accounts to find those errors, to locate those errors, and then to correct them. This is because it verifies, or it helps in facilitating that there were no arithmetical errors in your T accounts or in your books of original entry, or when whatever you have done the accounting and the bookkeeping. So the trial balance helps in giving you an assurance that there were no mathematical errors, right? And in the end, most important benefit is that it helps in the preparation of your financial statements. That is, from your trial balance you prepare your income statement and your statement of financial position, because all the balances, all the account balances that you need in these two statements are already there in your trial balance. So what have we discussed? We have discussed that if the totals agree, the trial balance totals agree, it will give you an assurance that there was no problem in the accounts. However, there can still be problem in your accounts, or in your double entries, or in your books of original entries, right? Why? Because even if the trial balance totals agree, that is, the debit side is equal to the credit side, there can still be errors in your trial balance. Is that even possible? Yes, of course, that is possible. For instance, let's take a few examples. For instance, what if a transaction is not recorded at all in the books of accounts? What if you forgot to record, for instance, a cash sale? A cash sale is not recorded in the cash book as well as in the sales account, right? So there is no debit entry and there is no credit entry in the books of accounts, right? So the cash account is understated as well as the sales account is also understated. So when you take both of these accounts, the understated values in your trial balance, the totals will still agree, of course, with an incorrect value, with an understated value, but still it would agree, and then this error will not be revealed by the trial balance, right? Similarly, what if instead of debiting one debtor, you made a sale to a debtor, so sales credit and debtor debit, you debited another debtor? Will it affect the balancing of trial balance? No, it won't, because it will affect the individual T account of the debtor, but it will not affect the total debtors figure which you take in your trial balance. So the total debtors will remain unaffected, and trial balance will not reveal this error, right? Similarly, what if the error is made in the book of original entry, or in the book of prime entry in the day books? For instance, the value of the transaction was 400, right? But you recorded this as 500 in the book of prime entry. in the book of original entry or in the day book, right, and you take this same figure in both the accounts affected with because of this transaction. So the trial balance again will fail to reveal this error, as both the entries will be made with an incorrect value but with the same value. So the trial balance totals will still agree, right, and there are many more examples which we will be covering in this topic. So there can be some errors which do not affect the balancing of trial balance. Of course, it will affect the individual balances of that account. It can affect the profit as well in some way. It can also affect the capital. But there are some errors that do not affect the balancing of trial balance, right? And now what are those errors? We'll be starting with the errors that do not affect the trial balance first, and then we'll be moving towards the errors that do affect the balancing of trial balance. So there are in total 6 errors that do not affect the trial balance. These are error of omission, reversal, error of commission, principal, error of original entry, and compensating errors, right? So we'll be starting with these 2 errors but in the next video. So I'll see you in the next one.